Hi everyone, welcome to my dear students. This is Digital Learning Initiative by the Department of Collegiate Education. Myself, Narsimhamurthy TN, an assistant professor and an in-charge principal, Government First Aid College, Medigeshi, Mudgiri Taluk, Tumkuru district. Once again, welcome all of you. Today I am going to share some knowledge in the subject of accounting for managerial decisions for 5th semester BCom. In that, the second chapter, marginal costing and absorption costing. In this chapter, I am going to share some knowledge in the topics of meaning, definition, features of absorption costing, and differences between marginal costing and absorption costing. Let us begin the class. So, first of all, we must know the meaning of absorption costing. Absorption costing is a method of costing in which all costs, both variable and fixed, are charged to the products for the cost determination in absorption costing. Absorption costing is a method or tool or device of cost accounting. Under this costing method, it considers all the costs, that is, variable as well as fixed costs are charged to the products for the cost determination in absorption costing. So then the cost unit is made to bear the burden of full cost irrespective of the current level of operations. Under this technique, cost per unit remains same only when the level of output remains same. In this method, cost unit is made to bear the burden of full cost irrespective of current level of operations. This technique, the cost per unit remains same only when the level of output remains the same. If the same production number of units will be the same, automatically the level of output also equals to the same. When the level of output changes, the cost per unit also changes because the presence of fixed costs which remains cost constant and the presence of variable cost is going to be changed. Therefore, if the output also increases, the cost of the cost per unit as also changes. The change in cost per unit with a change in the level of output in absorption costing technique poses a problem to the management in taking managerial decisions. Absorption costing is a technique also termed as traditional or full cost method. The change in the cost per unit with a change in the level of output in absorption costing technique poses a problem to the management in taking managerial decisions. Hence, this method is also called traditional or full cost method. Absorbed cost is a managerial accounting method that accounts for the variable and fixed overhead costs of producing a particular product. So, this absorption costing is considers whatever the variable costs as well as fixed costs, overhead costs are of producing a particular product is to be completely considered. Hence, this method we call it as a traditional or full cost method. After knowing the introduction of absorption costing, let us will move to the meaning of absorption costing. So, absorption costing is also a full costing. It is a conventional technique of ascertaining cost in which both fixed and variable costs are considered as production cost or production cost or cost of production. So, this absorption costing is also, we already know that this is called full costing or conventional method of costing. It is a ascertaining the costs which both fixed and variable costs are considered as production costs or the cost of production. Absorption costing allocates the fixed overheads to a product whether or not if the it's sold in the period. Absorption costing includes fixed overheads changes as a part of product cost. Absorption costing method is considers all the costs, that is fixed as well as variable costs. Hence, it is a practice of charging all costs, both variable and fixed operations, processes, and products. It is the oldest and widely used technique of ascertaining cost. Ascertaining cost. Cost is made up by of direct costs plus overhead costs observed on the same suitable basis. This method is in this method the charging of all costs is to be considered to the operations, process, and products. It is the oldest and traditional method of to ascertaining the cost. When cost is made up of direct cost plus overhead costs observed in the some suitable basis. Absorption costing observes all manufacturing costs per unit produced by including overhead in addition to materials, direct labor costs. It helps companies determine the overall cost of producing in a single brand or line of products and which of these are all most profitable. So, dear students, this is a method of costing observes all the manufacturing costs. That is, all manufacturer costs comes under the variable as well as fixed costs. In this method, both the variable as well as fixed costs are to be considered for the finding out or ascertaining the profit. If any company produces a line of products or a single product or multiple products, it is very easy to find out the which one is more profitable. Absorption costing is useful if there is only one product, there is no inventory, and overhead recovery rate based on the normal capacity instead of level of activity. If any company or any firm producing a single product, under such a situation, the absorption costing is going to be a most suitable and most appropriate method to find out the profitability. In this method, if no inventory or overhead recovery rate based on normal capacity instead of level of activity. Absorption costing method consider more cost included in the ending inventory which is carried over into the next period as an asset, as that closing inventory is treated as a current asset or an asset in the balance sheet. It should be treated as inventory, hence it is an asset, therefore it shows in the balance sheet. After knowing the introduction and meaning, will know to the definition of absorption costing. According to Institute of Cost and Management Accountants London, that is ICMA London, defines or gives a definition of absorption costing is a method for inventory valuation whereby all the manufacturing expenses are allocated to the cost centers to recognize the total cost of production. These manufacturing expenses includes all fixed as well as overhead costs, variable costs. It is a traditional method for cost ascertainment, also known by the name full absorption costing. So, according to ICMA London, it states that this method, that is absorption costing method for inventory valuation, where all the manufacturing expenses allocated to the cost centers to recognize the total cost of production. Whatever the all manufacturing expenses directly allocated to the cost center. Here it must be inventory must be valued. These manufacturing expenses include all fixed as well as variable costs. It is a traditional or conventional method of cost ascertainment. After knowing the definition, we'll move on to the features of absorption costing. So there are some features for the absorption costing. Okay, students, let us will discuss. For the first and foremost feature is in the absorption costing, a product, the cost is determined on the basis of full cost, that is variable and fixed manufacturing cost. In this method, it is treated as also a full basis, basis full cost or basic full cost method. So, because it considers both variable as well as fixed manufacturing costs. The second feature is the cost of inventory will be higher than absorption costing, as product cost includes factory overhead, fixed factory overhead. The second feature is the cost of inventory will be higher in the absorption costing because the product cost includes factory overhead, fixed factory overhead. In absorption costing, net income changes with the production. If the number of production of units is going to be high, the net income also going to be high. If the production comes down, the net income also comes down. And then absorption costing is a method of pricing decisions to calculate selling price by adding profit under total cost. So, in this absorption method, it is used in pricing decisions. Pricing decisions calculate selling price by adding the profit or in the total cost. It is a conventional costing, whereas gross profit is determined by subtracting the cost of goods sold from sales, and net profit is determined by subtracting the commercial expenses from the gross profit. So, this method of costing is also called as a conventional method, and the gross profit is determined by the subtracting the cost of goods sold from sales. Net profit is determined by subtracting all commercial expenses from the gross profit. So the another feature is under or over allocation of fixed inventory, fixed factory overhead is required to be adjusted in absorption costing, as it is included in the cost of production. Under this method, fixed factory overhead is to be adjusted in the absorption costing. Absorption costing is acceptable under accounting standards for valuing inventories for financial statements. So, absorption costing is required for generally accepted accounting principles for external reporting. So, therefore, it is acceptable under accounting standards to value inventories for financial statements. So, after knowing the introduction, meaning, definition of absorption costing, we'll move on to the last topic in this during this session is the differences between absorption costing as well as marginal costing. So the first and foremost difference between the absorption and marginal costing is comes under the definition of the both costing methods. Absorption costing is a costing system whereby all manufacturing costs includes variable and fixed costs are classified as a part of product costs. So this is to be very important different definition or differentiation among the absorption and marginal costing. It is a absorption costing is a method of costing system where all manufacturing costs including variable and fixed costs are classified as particular product costs. On the other hand, or while marginal costing is a costing technique whereby the marginal cost is charged to units of cost while the fixed cost is completely written off against the contribution. So, by the definition wise, the differentiation is both are the marginal costing techniques. I'm very sorry. In the marginal costing is a costing technique whereby the marginal cost is charged to units of cost while the fixed cost is completely written off against the contribution. So the next difference is the costs involved. Costs involved in the absorption are marginal costing. So in absorption costing, both variable and fixed costs are considered in the cost of product. On the other hand, in marginal costing, only variable costs are considered as product costs and fixed costs are classified as period costs. In the absorption costing, we already know the meaning, definition, introduction in this session, during this session. So, by the definition itself, it considers the absorption costing is considered variable as well as fixed costs. On the other hand, marginal costing only variable costs are considered as a product cost and fixed costs are classified as period costs. And the another differentiation is contribution per unit. Contribution per unit. In absorption costing, contribution per unit is considered, while in marginal costing, net profit per unit is considered. After calculating the net profit under the marginal costing is to be considered what is the contribution per unit. And then the another differentiation by the by in between the absorption and marginal costing is cost per unit. In absorption costing, major consideration on the cost of each unit is given priority. However, marginal costing, major consideration on the cost of producing the next unit is given priority. In this absorption costing, major consideration on the cost of each product is given priority. However, marginal costing considers major consideration on the cost of producing the next unit in given priority. So the next differentiation is on the overheads recovery. Absorption costing emphasizes overheads recovery, while marginal costing emphasizes the calculation of contribution of each unit. So it calculates contribution for each unit. And the classification of overheads. So in absorption costing, overheads are classified into production, administration, distribution and selling overheads. On the other hand, marginal costing overheads are classified into fixed as well as variable costs. So the another differentiation is effect on cost per unit. In absorption costing, the cost per unit is affected by variances in the opening and closing stock, while in managerial costing, the cost per unit is not affected by the variance in the opening and closing stock. In the absorption costing, the cost per unit is affected by variances in the opening and closing stock. On the other hand, in marginal costing, cost per unit is not affected by variances in the opening and closing stock. And another differentiation is gap compliance, that is generally accepted accounting principles. Here, the absorption costing as well as marginal costing both are the management tools as well as both of the cost accounting tool techniques, both are used in the business analysis. However, the absorption costing is gap compliant, that is generally accepted accounting principles compliant. On the other hand, marginal costing is not gap compliant, generally accepted accounting principles compliant. It is not a gap compliant. And then the another differentiation is reporting. Absorption costing is used for external reporting to the government, tax authorities, and shareholders. On the other hand, marginal costing is used for internal reporting, particularly to the management for decision making. So, absorption costing is used for external reporting of the to the government, tax authorities, shareholders, bankers, financiers, etc. On the other hand, marginal costing is not a gap compliance. It is used internal reporting of the management of for decision making. And the another differentiation between the absorption and marginal costing is decision making. While the absorption costing is not very helpful in making managerial decisions, on the other hand, marginal costing is helpful in decision making due to the fact that it considers additional costs involved. So here at the time of taking decision making process in absorption costing, it is not very helpful in making managerial decisions. On the other hand, marginal costing tools are helpful in decision making due to the fact that it considers additional costs are involved. So this is my dear students, this is a class for the absorption costing introduction, meaning, definition, features of absorption costing, as well as differences between absorption costing and marginal costing. For more information, kindly suggest the following references books. I hope this video is helpful to the students. Thank you very much for your valuable time. Kindly give a comment or subscribe the channel. Thank you. Thank you very much for your valuable time.